Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. Happy Friday to you guys. Hope you guys have some great outstanding plans up for this upcoming weekend here. It is Friday, July 20th. We got a very quiet day today. We have no economic news scheduled on the calendar today. Stock market is up. Early sessions were kind of seesaw back and forth, kind of like an unchanged level, but kind of going a little bit in the negative, a little bit on the positive, and this is kind of across the board on all three indices. So, but right now it looks like it's starting to take off a little bit more into positive territory. We got, of course, Q2 earnings season upon us, and it's doing quite well. Majority of them are overperforming, which is the good news. So next week we will have a much busier week. We'll get a glimpse of this Q2 Q2 GDP, which a lot of people think it could be very hot. So we'll have to kind of wait and see on that. We'll have some housing information next week. So again, those will be all important. Today could be dictated by of course the corporate earnings reports, or we could get some geopolitical stuff in there as well. That's been on the minds of other people. We have had some tweets by President Trump, which in the past has, but they've been they're looking at, but not really putting a lot of emphasis on today's trading. Trump's had related to the tariff talk. Doesn't look like things are looking too optimistic on there, because he basically said that he may start tariffing the European automobiles to China, maybe doing half a trillion dollars, like $500 billion worth of goods coming in. And then he criticized the rate hikes from the Fed, thinking it's counterproductive to what he's doing to the economy. So again, these were different things that the investors are looking at, but they're not putting a lot, because doesn't seem like anything yet has been implemented or talked about moving forward with these as of yet. So unless they look like they're going to go further than a tweet, they're kind of holding off any decision making. So right now, the stock market looks like it's taking off a little bit here. And as you can see here, here's the bond market. Yes, so we had a nice little rattle. We even broke above the double layer of ceiling, which has been extremely difficult to do, but it wasn't very convincing, as today we dropped well below that. Now we're right back down to the 25-day moving average, even starting to push this one here. And this is, so right now we're down about 20 basis points, which translates to pricing being worse than what we had yesterday. So again, as I mentioned, as this 25-day moving average moving up here, we got the 100-day moving here. At some point, it's going to come to a decision where the market's going to have to move one way or the other, and we have a long ways for both sides. So if it breaks the positive side, we got about 75 basis points this way. If it breaks the negative, we got about another 100 basis points to the south of us. That could help us out. That would worsen rates by quite a bit. So again, we got to be very cautious in this level here where we're currently at. Here's the Treasury. So with this, the Treasury breaking above the 25-day moving average, this could put more pressure onto the bonds. And so far with this being below the 25-day moving average, it's been kind of helping bonds, but with it now breaking above it at the 2.88 level, 2.89 level, actually almost closer to 2.9 level. It's like 2.88 or 888 or something like that. So at that level, it is basically going to put more pressure on bonds. So as this rises, bond prices will start to drop further in basically increasing interest rates here. So again, as I cautioned, as we reach that point, my feeling is my gut tells me it's going to keep pushing it further down, and I've given some reasons behind that, from the Fed's great unwind to just the appetite out there that's for mortgage-backed securities and treasuries compared to what they can get in the equity market. So they can get better rate of return in equity market versus what we're seeing here. All right, so again, rates are a little bit higher today as a result, and it looks like it could start trending that way, so just be cautious. If you guys want, follow over on Twitter. I'll be putting updates as the midday and close comes in, and then you can get more updates as to where we are moving in those directions if rates improve or go negative again. So that could be fun at Mike Bjork on Twitter. Otherwise, you guys have a great rest of your day. Enjoy your weekend, and we'll look forward to see you guys on Monday. Thanks for watching. Bye-bye.